This voice is taken from an article with the title, How Does the Exchange Rate Impact Currency Pairs?, which has been published on TraderTalks.net. The exchange rate is one of the most important aspects of trading in the forex market. It affects the value of different currency pairs and can make a huge difference in the success of a trader. In the foreign exchange market, exchange rates are the prices of different currencies in terms of another currency. When one currency is exchanged for another, the exchange rate is the rate at which the currencies are exchanged. This rate is determined by the supply and demand of each currency in the market. When the demand for one currency is higher than the supply, the exchange rate will increase. When the supply is higher than the demand, the exchange rate will decrease. The exchange rate is always changing, and this can have a significant impact on the value of different currency pairs. When the exchange rate goes up, the value of the currency pair will also increase. On the other hand, when the exchange rate goes down, the value of the currency pair will decrease. This is why it is important for traders to pay attention to the exchange rate. When trading in the forex market, the exchange rate also affects the amount of leverage that can be used in a trade. Leverage is the amount of money that a trader borrows to make a trade. When the exchange rate is high, traders can use more leverage and make larger trades. On the other hand, when the exchange rate is low, traders are limited in the amount of leverage they can use. The exchange rate also affects the amount of profit or loss that can be made from a trade. When the exchange rate is high, traders can make larger profits. On the other hand, when the exchange rate is low, traders may end up with smaller profits or losses. The exchange rate also affects the cost of trading. When the exchange rate is high, trading costs are also high. On the other hand, when the exchange rate is low, trading costs are also low. Finally, the exchange rate affects the risk of a currency pair. When the exchange rate is high, the risk of a currency pair is high. On the other hand, when the exchange rate is low, the risk of a currency pair is low. As you can see, the exchange rate has a huge impact on the value of different currency pairs in the forex market. It affects the amount of leverage that can be used, the amount of profit or loss that can be made, the cost of trading, and the risk of a currency pair. Therefore, it is important for traders to pay attention to the exchange rate. When trading in the forex market,